we are moving in step by step. We are moving in step by step from basics to advanced. And we are starting from market structure. When we say market structure is just a simple means like price, the shape of the price, right? The shape of the candlesticks. That's what we call it for market structure. And we have three major types of market structure, which is we have what is called the uptrend. We have what is called the uptrend, and then this is the uptrend. This is the uptrend, and then we have what is called downtrend. And then this is the downtrend. And then we have what is called the ranging market or consolidating. The range market. That's the range. Range. And then, yeah, that is all. And then before we know, let's go in one after the other. We are going from the basics to advanced. So starting from the market structure, the basics one, when we say market structure, like when we say uptrend, the uptrend consists of what? Lower lows. The uptrend, it consists of lower lows and then what? Lower high. It consists of what? Higher highs and then what? Higher lows. That is the uptrend. And in the uptrend, we only looking for what? Buying opportunities. The reason why HE stands for the higher highs and then HL stands for what? Higher low. The reason why we call it a higher high, we call this area as higher highs, because if you look at this high here is what? Look at it. If you look at this high here, you can clearly see that this high is what? Higher than what? This high. Hope you are getting me. That is why we call it what? A higher high. And this high also is what? It's higher than what? This high. And we call this low higher low because if you look at here, this low is what? Higher than this low. And this low also is what? Is higher than what? Of this low. So meaning this one is higher than what? This one. And this one too is what? Higher than what? This one. That is why we call it what? Higher low, higher lows, and then what? Higher high. Yeah. And under the higher the uptrend, this is the uptrend structure. Don't forget, this is the uptrend structure. And then in the uptrend structure, we only look for what? We only look for buying opportunities, right? In the uptrend structure, we only look for buying opportunity. The reason why, and there's something like the movement. You can clearly see that. Let me say something. You can clearly see that from here, from this area here, we have a move, and then we have this one is a collective. This one is a collective impulse, and then a collective impulse, and then collective impulse, and then a collective. So these are the two types of the movement. Hope you are getting me. Which is, let me note it down. We have two types of the movement, which is what? Impulsive, impulsive move, and then a collective. That is correct. No. We have two types of what market movement. We have the impulsive. This is what we call what the impulsive, and then a collective. Impulsive, collective, and then impulsive. The one pushing, if we having an uptrend, the one pushing to break the swing low. You see that we have a break of market structure here. We have a break of market structure here. The one moving from the low to break the recent swing high, we call it what? Impulsive. I hope you are getting me. And in uptrend, we trade only the what? The impulsive move. We don't trade what? A collective. I hope you are getting me. So the collective here, we don't trade. We what? We trade what? What is called the impulsive. And then a collective here, we don't trade. We trade what? The impulsive. And one thing, the psychology behind this thing is what? Like the reason why we don't trade the collective is that under the collective, it gives us what? A lot of what? Market noise. When we get there, you get to understand. It gives us what? A noise. When we say a noise, meaning that when prices come, we are going to see like a channel, trend channel. We are going to see something like, meaning we are not going to like scatter market. We are not going to get a clear trend from there until price will be what? Reaching our point of interest. And moreover, when price, if price will continue pushing to the upside, we are going to what? This lows here are going to what? Always be what? Respecting. We are not going to get a breakout from what? This low here. If price will continue pushing to the upside, these lows creating here are not going to what? Get invalid. We are going to get continue getting a lows, a higher lows until price or what will come back. If price come back, if price push to this downside and breaking this low here, then we consider the price is no more in a hot uptrend. Price will push here and create a low, a high, and then continuation to the downside. So if happening like that, we consider price is what? We are not in the hot uptrend again. So if price will continue pushing to the upside, we are going to continue getting the series of what? Higher highs and what? Higher lows. We are going to get in a breakout from what? From the higher highs, and then the lows are going to be what? Getting valid until price or what? Get invalid of what? One of the what? The most swing what? Low. And then we have what? A downtrend. And then under the downtrend, the series of downtrend, we have lower lows, a lower high, and then what? Lower lows, right? And then under the downtrend, we only what? We only trade the lower high, meaning that we only place a trade here. You sell here, you sell at this point, you sell at this point, we sell at this point. But we don't what? We don't buy, because price is what? Pushing to the downside. So we don't buy during the downtrend move. And then under the downtrend, we call this area, the one breaking the lows, we call it what? The impulsive. And then the one creating the lower highs, we call it what? The collective. And then yeah, so we don't trade the collectives. Remember, don't forget, here the impulsive move or what will push to the upside. But here the downtrend, the impulsive move push towards to the downside. So take note of it. So if the impulsive move It's pushing to the downside, meaning we call it what? A downtrend. And the reason why we call it a downtrend is that we price continue breaking what? The lower lows and creating what? Creating more lows. I hope you are getting me. If it continue breaking the lows and then giving us what? More lows. So before we can say the low or the downtrend is over, we need to get the invalid of what? Our recent swing high. I hope you are getting price might break up from here and get into what? A point of interest and start giving us what? A series of what? Uptrend, which is lower lows, higher lows, and what? Higher high. Because if you look at here, we can clearly see that this place, when we get a breakout, this place will serve as what? A high. This area will serve as what? A high. Higher low, and here will serve as what? A high. And this will serve as what? Higher low, and this will serve as what? Higher high. So anytime we get invalid of what? The recent swing lower high, meaning price is what? Going to tend towards an uptrend. So if price will continue pushing to the upside, we are not going to break out from what? The most recent swing was. The most recent swing lower high. If price continue respecting the more recent swing lower high, meaning we are still in the what? In the downtrend. So under the downtrend, remember we said what? Price getting break of what? The lower lows, right? We got a breakout from what? The lower lows. And then the lower high will keep on what? Increasing, meaning we will continue getting valid lower highs, the true highs. So what? Price will break out from one of them. And then we have a range market or a range structure. We don't trade this kind of market. Why? Because we don't want to see ourselves trading this market. Why? Because under the ranging market, there is a lot of range, because from here to here, sometimes you may see something like mini structures forming inside. As soon as we get to this point, we may get one candlestick boom to the downside. Sometimes we may get one candlestick boom to the upside. So like it gives us what? A lot of what? Noise. We find it difficult to able to trade, because you don't know when the price is what? Getting to what? Going to break, and we don't know where price is going to break out. So for the range to be valid, we will continue to be seeing equal highs and then what? Equal lows. So this place is what? Equal, the high and this high and this high, they are what? Equal. And then lower lows, like we are going to get the lows, which is all going to be what? Equal, in line at the same point. We call that market is what? Ranging, and we don't want to see ourselves trading this type of market. We only interested in what? The uptrend and what? The downtrend, meaning that we try to avoid getting ourselves involved this ranging market. Okay, let's try to see if we can identify some in the top. So if you look at here is good, right? Yeah. This chart is good. If you look at this place, we can clearly see that we have this valid what? A low, price created a high, and then it gives us a low, price created what? A high, it gives us what? A low. Meaning that we are still in what? In the downtrend. We said what? When price continue respecting the lows, meaning price will continue pushing to the downside as soon as you break out. So you can see that this low, we got this low, which it gives us this equal high here, and then later it created what? A low, and it break out from there. So if you look at this point, you could see that this place were serving as what? The true recent swing what? Swing high, and all of a sudden we got what? We got a breakout. We got a shift of the market structure, which is breakout from that line, meaning price will not continue pushing to the downside. but it's going to continue pushing to the upside. So we see that it created what? A low, and then it created what? A high here, a low, and then a high here. Later it created what? A low, and then a high here. And we said if price will continue pushing to the upside, we what? The low keys are going to what? Continue be what? Respecting, and we are not going to get invalid. As soon as we get the invalid of recent swing high or recent swing low, meaning the trend has been what? Changed. So if you look at this place, you can see that here we don't have a trend change. While price, yeah, we got a breakout. Or when we get to liquidity, we'll get to understand. Let's consider this one as a breakout. So we could see that recently price created this low, and then it created what? This high, and now it's trying to give us what? A low, right? Meaning we have shift of the market structure from here. We break the recent swing low. So price is what? Changing towards the downside, meaning that from here, if price able to break out from this key level, we what? Price must what? Come back to this area here. Price might create another high, and then another low, continuation to the downside. Why? Because we break out from the what? The recent swing low here. So price is no more an uptrend, but it's what? It's a downtrend. Yeah. Let me see if I can get equal structure. Let me go to, I think, GBP USD. Yeah, so if you look at this place, you can clearly see that price is what? Trading equal highs and what? Equal lows. In this case, we don't what? We don't trade, as we said, because look at here, you can clearly see that we have a boom to the upside. By coming to the downside, we have a mini candlestick, and then a boom to the upside. Coming to the downside, we have a mini candlestick. A boom to the upside. Coming to the downside, we have a mini candlestick, and then later we got what? A breakout from the zone. So if you are trading, you don't know if you are in this type of market, you don't know whether you're supposed to hold a sell or you're supposed to hold a buy. I hope you are getting me. So because you don't know when price can be what? Reverse, and you don't know where. Because we might get something like this. Maybe we have some structure, equal prices around here, right? And then price is what? Trading in between. Inside it, sometimes you may get it something like this, and then to here a boom to the downside, then we will have something like this to here, boom to the downside, then a boom to the upside. I hope you are getting it. Later we may get something like this. Maybe you place a sell here. I hope you are getting me. You place a sell trade here, whereby we say price is in consolidating, so you are targeting the last point. So maybe your last TP, you target this area as your TP. Later our price will push to around this area, and then a boom to the upside. You see, price take your stop loss. I hope you are getting me. So this is the reason why we don't trade this type of market when it's in the consolidation zone. But what we do is that we try to exercise patience, and you see as soon as we get a breakout, there is a demand here. When we get there, you get to understand, and later the demand fade. As soon as we sell, when price is because when we break out, we now having we see that we now having this area will serve as a low, and then we have a high. So we expecting price to come and then created a high, meaning we are having uptrend a series of an uptrend. But when we break out from this low here, this recent low, so this area is our recent swing low. So when price break out from that key level, we said price is not in the uptrend again, but it is in the downtrend. I hope you are getting me. So you see that price created this high, and now it trying to created a low. So what we do is that if price able to what get a break, if able to break up from this key level, meaning we will expect price going back to this layer and then creating another low. Yeah, so this is all what we will talk about, the basic of what this is, the basic of what market structure. Do we have any question?
No, please.
No one have a question? Mr.
No, I don't have.
Israel, do you have any question?
No, sir, I don't have any question yet.
I hope all is clear.
So far.
Okay. So try to get to know how to identify your true high. There is what, when we get there, like we are now coming, so you will get to understand. Remember, whenever we start, the low that break the high is what is the true low. And then the high that break out what the low is the what is the true high. I hope you are getting me. So if price pushing to the upside, because sometimes, let me get you a typical example from the chart. There is something you need to I have deleted. Yeah, I had. So if you see this, if you see the daily time frame good, for instance, you will see that this area at first we were having, that is why we have internal structure and then complex of what internal structure to learn, of course. You will see that from this area we having what a high, a low, a high, a low, a high, a low, a high, a low, a high, a low. I hope you are getting me. And then we got this high. So in this area, you will see that you may thinking price is what pushing to the upside. We got a breakout, but remember, it be this low. This is the true low that created what this high. I hope you are getting me. If it is true low, this will created this high. So now we having the valid high here because it's this high that break out from what this high here. So this is our true high. All this or whatever going here is just an what internal structure. So meaning that when we break out from this high here, we pass crossing above this line here, we call it what a breakout. So that breakout, we consider that breakout, where do that breakout originated from? And we could see that the last candlestick of what a bearish candlestick will serve as what our originated what point, because if you look at this page, you can clearly see that price is what if it this candlestick, that's what give us what a breakout, a body close above body close for this line. So we consider that price as our string for string low or a demand level. When we get there, you get to understand. So when price gets invalid from this area, we don't consider price in the uptrend again, but we consider it what in a downtrend. I hope you are getting me. So as we are moving in step by step, this is our just beginning how to identify it. Never forget how to what your trend string, your trend, the series of your trend. The uptrend having a series of what lower higher highs and what higher lows, and then the downtrend have a series of what lower lows and what lower high, and then the ranging market or choppy market or consolidating market, we call it what? Equal highs and what? Equal lows. And that kind of market, we don't what? We don't trade. Because let me show you something on USD JPY. On the USD JPY recent market here, let me reset. Yeah, on the recent market here, you will see that price is what? In ranging of here, right? So you don't know like where price will break out. I hope you are getting me. That is why we need to avoid trading this type of market. Because if you see this structure very carefully, you will see that price were what? Giving a high here, a low, a high. Remember, this is what? The true, remember this is what? Our true what? Our true low. I hope you are getting me. That created this high, right? So since price is not past this low, we can consider price is what? In a downtrend. I hope you are getting me. Because looking at this page, you may say that we having this series a high, a low, a high, and then ranging here. Later on, we break out from what? This low. So you may thinking we have a shift of market structure. Remember, it is this low that give us what? A valid high, right? So since this low is not breaking out, we can consider the price is what? In a downtrend. We are still in the ranging zone. I hope you are getting me. So if you see here, after the breakout price kissing the what? The most our point of interest here. This is our point of interest. After price came back to that point of interest zone, we got what? A massive move to the upside, and then give us a low, and then continuation to the upside. So remember, try to able to what? Identify the true high and then true low. Thank you very much. If you have any question, if there's no question, then we can end it for today and continue the next day. Is there any question?
No question, please.
Okay. I hope he's right. There's no question at your end. Then we will end here. May God bless you for joining me here. As we are start, please try to follow me step by step. We are going to try to get it in step by step and try to grab everything. Whatever that will make us be successful traders, we will try to learn everything. May God bless you for joining me today. We shall meet another day. Thank you. Bye.
Thank you, sir.